Hello, everybody. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about the International Monetary Fund, the IMF. Fed Chair Jay Powell just gave some comments over on the East Coast here in the United States. We're going to go ahead and recap those. Just a couple of key points there to hit. He really didn't say much with regards to policy. Also, we want to sort of go over the economic calendar. I'm going to show you an economic calendar that I sort of reference from time to time. We do have an economic calendar available at howtotrade.com. Be sure to check that one out. But we're going to go through and see exactly what's going on with our calendar. As of yet, I don't have any answers for you. We had a CPI live scheduled for tomorrow. We're going to go ahead and cancel that because I don't believe the CPI numbers are going to come out tomorrow. I don't see any news that's telling me that's the case. If you guys see some, send it my way. Right now, we're flying in the dark. I believe there's another vote coming this afternoon on a temporary funding measure that would get the U.S. government going. If we get that signed in the next 48 hours or so, then we're probably going to be doing NFP on Friday. But as of right now, we're just sort of in a holding pattern. I don't really have much to tell you. I do want to apologize briefly for the scheduling mistake earlier today. I had the stream scheduled for about 8 a.m., and the reason why I had that out there is I wanted to get ahead of Jay Powell and what he was going to say because I believed that he was going to be speaking at the IMF. That was not the case, so I said, well, I mean, we might as well just do a mid-session. That way we can see a little bit more price action and maybe give you some better analysis, at least from a technical perspective, and then also we can see what Jay Powell said as opposed to maybe trying to get the jump on what he said. So that, once again, that's my fault there. I do apologize if that messed up anybody's day. Just always remember, if the schedule for this week is going to be really difficult because it's in flux. And like tomorrow, I canceled the CPI Live because I don't think we're going to get it. So we're going to go ahead and just do a mid-session brief like we usually do right about this time, mid-strategy, a midweek strategy session, trading the U.S. government shutdown. We're going to examine the shutdown a little bit more. With a bit of luck, it'll be over so we can actually get going with our trading. It's very important that we don't get sucker punched by these numbers. We need to make sure that we know exactly when they're coming out. So that's sort of where we're at. It's been a unique week, guys. It's been a challenging week to get everything nailed down the way that we usually have it nailed down. And sometimes that's how trading is. Really, sometimes that's trading. You just got to be ready to roll with the punches and do the best you can, and that's the basic idea here for today. It's good to see you, Lewis Shepard. Always a pleasure, Lewis. Yes, sir. Good to see you, Bruce Gordon. Hey, how you doing, Bruce? Welcome back. Andrea Gorwal, always a pleasure. Andrea, Lita, good to see you, Lita. I think that Tuku, good to see you, Tuku, and Gordon Williams. Gordon Williams had a great question here in the live chat over on the How to Trade community. It really was. The question was this: should I use a trailing stop after I'm in profit, and know how many pips? And I mean, that really is the billion-dollar question, Gordon. How many pips do you set a trailer? It needs to be different with every market you trade, and it needs to really reflect the volatility. Like, you couldn't really take a crude oil futures and set it by 5 or 6 or 8 pips on a trailing stop on anything other than a scalp and expect to have much success, just because price typically moves up and back very rapidly. However, if you could use maybe an 8 pip or a 10 pip or a 12 pip on those Forex majors that don't really oscillate that much and move, you might have a little bit more luck there. So when you're using a trailing stop, this is the one thing I say: you can do anything that you want. Be consistent. Be consistent. A lot of folks have asked me over the years, say, Shane, do you move yours to break even? Do you ever move to break even and make it a risk-free trade? A lot of traders do that. A lot of analysts do that. And they believe that, well, we can mitigate our risk. And I'd say, yeah, but you'll find that you get stopped out a lot at break even, and a lot of your winners come off the board because of it. So be careful with your trailing stops. I mean, I don't have a concrete answer for you, Gordon. Trailing stops are something that I've avoided over the years, and the reason why I've avoided them is because it's too many times you'll see a price action go in your favor and then come back and stop you out and then continue on its way. So if you're going to use trailing stops, and there's probably a lot of traders in here that do just that, and they have a good idea of what a trailing stop works on a specific market, I would ask around, do a little bit of research. I can tell you that it's going to have to be different according to every market that you trade. You can't just go in there with a 10-cent stop with crude oil and think you're going to be able to do the same thing with, like, say, a gold or an E-mini S&P 500 or something like that. Let me see, Eli, zone-to-zone trail. I mean, that's what a lot of smart money concept players really love that. They go with the rally-based rally. Not many people saw that video. We built that video about, 8 or 9 months ago over at How to Trade Com. And it's rally-based rally, showed you exactly how to design your trailing stops according to market structure. It's not a bad way to do business. I've done a lot of that with symmetry, and it's really a challenge, guys. So if you're going to do it, spend some time and dial it in. Be sure that you know exactly what you're doing. I don't want you to get stopped out of winning trades over and over again. That can be very, very frustrating. All right, guys, let's go ahead and get right out to price action here. If you have any questions at all, today's a great day for it. We got a little bit to cover. We got quite a bit to cover. There's a lot going on in the markets right now. We're starting to get our sell-off really starting to pick up speed and develop in WTI crude oil. We're going to talk about that here in just a little bit. Gold's up and away. I got a message from a trader, an astute gold trader earlier today, and said, man, this gold market's kind of a little bit difficult because of the big reversal. We talked a lot about that yesterday. But all in all, you pretty much want to be long. And you see right here, gold's up again about 1%. Silver's off a little bit, a pullback zone really coming into view for silver. We're going to take a look at that as well. But as far as the rest of the action, it's pretty darn good. I mean, we've got the dollar index is off about 0.25%. Sort of knew that was going to come. Like I said, there's a lot of folks short-term that are backing the dollar. I don't have a problem with that if you're a momentum trader. For me, we got a pretty good idea what's going to happen with the dollar, and I'm going to sort of show you my line of thinking here in a minute from Fed Powell. So, T. Marina, good to see you. T, welcome. All right, so this is Australian dollar, US dollar. I sort of posted the link to our picks of the week for our Switch Markets market analytics video that we put out. So want to check that out, go ahead and feel free to do so. One of the hottest pairs, at least according to some of the volume data that I've seen over the past several sessions, has been the Australian dollar, US dollar. So the Aussie right here, we had a real nice level right around 64 even. I really like that zone. We're trading about 64.90, but this is a real nice monthly type of a market, not necessarily a market structure, but it really is a nice move. And a lot of folks are going to say, Shane, you probably should be doing your Fibonacci's right from this spike low. Remember, you don't have to always do the most recent spike low or swing low to swing high and vice versa. You don't have to do that. You can do it based on time. Time-based ranges can also be very important. But I didn't want to ignore that swing low down there. Now, that's the big spike low out of April that the markets crashed and everybody panicked. That's the big one that I really think is the basis for most of your Fibonacci retracements based on your monthly time frame for your Forex majors, if that makes any sense. You want to take that into account. You do not want to ignore that because it probably is the most important thing that's happened this year was that early April absolute panic when we saw the dollar just really get see an incredible amount of volatility due to the tariff worries. Now, we're coming into some fresh tariff worries. We're going to talk about that in a second, but this spike low right here to me is very important. What does it also represent? It also represents your yearly low. So that's 2025's low down there for the Aussie, right around 59.14. You see 64.04 somewhere right in there. I really like that 38%, not necessarily because I'm bullish this pair or that I believe that the price is going to pull back and then the Australian dollar is going to explode to the top side. I don't necessarily believe that wholeheartedly, although it does have gold. Gold's on a rally. That's going to help the Aussie. The USD, I expect it to give up some of its strength there relatively soon. So that would, both of those market drivers would speak towards the top side of the Australian dollar, US dollar pair. But for me, I like this rotational type of a market environment here. Look at, the market's flat. Say what you want. Nice big move there, and then a nice big pullback, and then there's a little move, and then there's a little move, and then there's a big pullback. You're just sort of rotating between that 67 level and 64. I would love to buy the 64 level just to sort of play an accumulation trade, maybe get in on some bidders that are going to drive this thing just a little bit north. But there's a lot of folks trading the Aussie right now, so I definitely wanted to bring this one up. I think that it's a pretty darn good market to be targeting right now, just because we do have a little bit of volatility, and we got a pretty defined range that 67 to 64. We've traded there for 6 months? It's most of the year, isn't it? What are we in the 10th month? Half of the year. All right, how's that? But I definitely want to be looking at the Aussie here. Gordon Williams trading the Aussie this morning, and it gave me a good profit so far. You can't really argue with it. If you're making money, you're making money, and there's no worries with that. But this was one of the markets that we targeted there in that market analytics. Kiwi CAD, I've been really adamant about this 80-25 zone. You can see it really is just rotation, sort of an interesting type of an environment, or at least dynamic, I would say. The buyers and the sellers are definitely knocking heads right at 80. You can see this month's low is going to be right down at 79.95, and then got to bounce back up to 80.30. That's no accident. That's bidders protecting 80 even. Very, very interesting type of a situation here. I have to think that maybe you're going to see this pair potentially come off a little bit. The big thing we have to remember is the Kiwi, RBNZ, Reserve Bank of New Zealand, has gone dovish. That's sort of going to be a bearish market driver for the Kiwi, but also the Canadian dollar doesn't necessarily have a strong crude oil market to work with right now. And if you don't have strong crude oil, it's really difficult to bet on the Canadian dollar, at least with any sort of conviction. So you definitely want to check that out. I think we're in for some good trading, though. I really believe the next month or so is going to be when you want to be achieving your financial goals with your trading. We are seeing the volume is back. It's good market depth. We've got movement on the Dow. The Dow's up about 300 points. S&P 500's up about 0.25%. The Nasdaq's off just barely flat. So there's movement in equities. The big time sell-off is sort of still in effect with Bitcoin and crypto. We'll talk a little bit about those towards the end of the stream. But Bitcoin down right around 112.7. It looks to me like you're going to get a hard test of that 110 zone, and that's going to be absolutely huge. I like 110 as a big-time downside support level. I think it could definitely be one of those that if we get it to line up with one of our indicators, It might be a trade idea here coming your way relatively soon. So just be sure to check out that analytics thread that's in the How to Trade trading room. I will be putting out a trade idea a little bit later today. We didn't get to it yesterday because we were building out the Switch Markets newsletter. So and honestly, there wasn't a whole heck of a lot to point out yesterday that we didn't point out on the live stream. So we're going to go ahead and wait probably till later this afternoon, probably after the U.S. market close. Come back, take a look at what happened today, and get us locked and loaded potentially for tomorrow's trade. The other thing that I want to be very careful of with the trade ideas is if we put something out and the government reopens, it's going to mess all our technicals up. It really is. So we're being very, very careful on that front. It may just be a news brief or an update later today. I don't necessarily know just yet. We are flying by the seat of our pants this week. We're not making it up as we go along. We're just trying to be ready for everything. Because you find that if you're not ready for everything, you're going to miss something. And if you miss something, it costs you money in this game. It really does. Let me see. Eli, loving the Great Britain pound Australian dollar from this morning. Yeah, we'll go ahead and take a look at that in just a second. Welcome to the Switch Markets community. Remember, if you have anything that you'd like to know or ask, be sure to do it on these live streams. I'm more than happy to answer as many questions as you'd like, and that could be a key market. That could be something like the trailing stop Gordon brought up earlier today. It really is up to you what you want to get accomplished with these streams. I'm here to do the best I can to help, just because I've been through a few situations in my trading career that aren't necessarily ones that I want you to repeat, but the information can really boost your efficacy and maybe get a little bit of confidence. I know for beginners, it's really difficult to get into the market with any confidence at all. You need to develop a little bit of confidence, and typically that takes experience and a little bit of success. So we're going to go ahead and see if we can get you on the right path. I do believe that we can. I think that we've got some interesting markets to look at. That's all I got to say. And then right now, welcome to Switch Markets. If you want to trade any of it, check out Switch Markets. They've got thousands of them lined up and ready for you. Here's a trade update that we did yesterday. I want to go ahead and just hit on this quickly. This is a Great Britain pound USD bid. We're still looking to bid right around 130, 150-ish, somewhere down in that zone. And we're still right around 133.13. So I really like that EMA. I haven't stopped watching it for quite a while, 130.170. So that 131.75 area to 131.50 is probably going to be pretty juicy downside support. Watching that one closely there. That trade idea with a bit of luck, and I know that we don't really depend on luck in the markets, but if we do get the opportunity to bid that zone, I think we do it, and we do it aggressively. Absolutely. Still watching, though. It's got to develop. As far as what we've got this week, I have more questions than answers. This is one of those, I'm not kidding you. I haven't seen anything like this. All the live streams over the past, really since, 2021? I haven't seen anything like this, what's happening to us this week. There's more questions than answers. Powell spoke today. He didn't say much. U.S. CPI was scheduled for tomorrow. Is it coming out? I can't find it on any data vendors, so I don't believe that's going to happen. Thursday, Powell's going to speak again. My guess is it's going to be more of the same. And then Friday, we're tentatively scheduled for a U.S. NFP. If we don't see a government deal, by Thursday afternoon, we're probably going to scratch that and just do maybe a trade the U.S. Open or something. Maybe after the volatility starts. We just got to wait and see exactly what develops there. All right, Great Britain pound Australian dollar. What can we really say about it? Very, very tight. I mean, you can see a really nice move there back in April. Very similar to a lot of what we've seen across the Forex since April. Sort of just a sideways type of a motif or an environment, if you will. And what we did is we went down and checked out the 13-period EMA, and that was a pretty darn good trade down there from right around what was that, 232, 2032, somewhere in that zone. Not bad. Now you're at 20511. Big picture. What do we want to get accomplished here? I have no bias. I have no bullish or bearish bias. I think that theoretically you would pretty much always like to play the pound to the long side against the Aussie. But with the shape gold's in right now, I mean, you have to respect the gold market. And when you're trading the Australian dollar, you have to also respect the gold market. So for me, I'm sort of looking at it in what could we really do on a short time frame? The first thing I would point out is that the 13-period EMA is a big-time downside support. Let's go down to a daily chart. We've sort of been looking at macro levels for right this minute. This is just Chop City, if you ask me. I mean, it really is. There's your big move. Okay, you got your big move back on the 10th of October, which was Friday. You're up about 1.66% since then. You're sort of trading inside of this range. This right here is curious, something that we call a failed auction. When you break above a key level, this isn't necessarily a key level, but it's sort of last week's high, and it's also a big-time zone where everybody sort of said, well, is this the beginning of a major breakout to the top side, or is this going to be top side resistance? As of right now, Friday's high is resistance. So we went up, we checked that out, we sort of washed out a lot of the retail shorts, and then we rebounded. So that is what the markets do repeatedly. I mean, you can see this zone right here. Your top was 20635, and your top right up there is 20654. I mean, that's almost not even fair. It stops you out by just a few ticks, 19 ticks, and then it turns with a big reversal back down into this zone. This would be a really hard one for me to trade, Eli, but if you got in on that trade up there and sold the top of this range, then that's fantastic work. That would be one of those pendulum trades that we talked a lot about for the past several, last year, 18 months. That's a textbook pendulum trade. Rotation, the idea being that we're going to trade back down to the center of an important range as opposed to breaking out and establishing a greater range. It's flat. It's a flat market, and you could almost tell that, realistically, you can almost tell that by the monthly chart. I mean, we're not trending. You know, we could say that, well, I mean, going back to September of 2022, we're way up, and I'd say, yeah, you are. Yeah, you are. But what have we really done for the last 6 months? Not much. Not much. Since the big volatility of early April, there's been a lot of tough sledding, a lot of tough trading, that's for sure. So we want to be sure that we understand when we're moving sideways, to play breakouts is typically a bad idea. You know, you can certainly get right. I mean, you can get one right, but man, that's really, really a challenge. So if you sold at the top of Friday's high with the Great Britain Pound Aussie, it didn't work. It didn't work very well, that's for sure. Let me see. The euro was pretty nice this morning. A little bit of action. We got EU CPI coming out later this week. That might be a pretty nice one. Let me see. Great Britain Pound Japanese yen. The guppy also loving from last night and has a gap top fill. We can take a look at the guppy here in a second. Let me see. Nico. The Kiwi CAD, if that 68% level is getting closed on the weekly now, 79.61 is very possible, right? Yeah. I mean, it really is. If you're looking at the Kiwi CAD, let's just go ahead and pull it up. So if you're looking for the downside, 69 or 79.61, essentially you just have to get that level to be taken out. So what could that mean? Well, I mean, remember our EIA WTI crude oil inventories here. Those numbers are going to be delayed one day because of the Columbus Day holiday. Those are going to come out Thursday. But that EIA figure probably is going to send some short-term volatility to crude oil. That might shake up the CAD a little bit. So you've got to get this downside support level to go. And if you're talking about 79.61, the 10,000 pound elephant in the room is just 80 even. So you've got to get rid of 80 even somehow. And if you can do that, you're going to make a little bit of money. But if you can't, it could be relatively difficult. So interesting trade, Nico. It is very possible. 79.61 is very possible. There's no question about it. And there's nothing that's not impossible, that's for sure. Let me see. Blue Mango. Hi, Shane. I hope you're well. Do you think that if Bitcoin closes this week below the previous week's low, it may actually trigger a bear market? No, I don't, Blue. I think the fundamentals that are overriding crypto right now really trump everything else, no pun intended. I think that cryptocurrency, given the regulatory environment and the support that it's gaining from the U.S. government, and globally as well. I mean, let's be honest, there's a lot of global institutions that are adopting Bitcoin and crypto on anywhere. Now, it may consolidate between 125 and 100 for an extended period of time. That's certainly possible. I think that your bear market probably develops if you see 100,000 get washed out. We'll look at the technicals here in a second, but no, I don't see a bear market setting up in cryptocurrencies at all. I don't see that. Now, I see pullbacks are part of life. That's what happens in a trending market. You're always going to get pullbacks. But the question is the top in for Bitcoin? Boy, I highly doubt it. Highly doubt it. Let me see, Eli. I did get the bottom of that zone. Well, you can't beat that. Can't beat that. Let's take a look at the guppy, though. It's an interesting pair. I haven't really looked at this one in quite some time. Probably should. The Japanese yen, we're sort of still developing, long-term opinions for it. Right here, okay, so we had a key level, which was 200. We tested that in July. You tested that in August. You tested that in September. And now it looks like we've broken up above the 200 level. To me, I'm just licking my chops. I'm saying, okay, the breakout has a pretty good chance of being on. Where do I want to buy it? Where's the bid? It's relatively straightforward for me personally. You're going to be looking at something from that spike low right here beneath that gap open that we saw last week. It's not really a gap in my view. I see these price points here. It was only traded a few days before, so these price points, in my opinion, are still saturated. So I don't believe that we necessarily have to go down there. But what I will say is this area right in here, right around 200, that's going to put you sort of right around your golden zone, 62%. And then also 78% is going to be down there at 199.17. So, if I'm approaching the guppy right now, number one, do I believe that we are now in a bear market for this pair? No, I don't. I see a pullback being very possible here. We're already sort of seeing a crazy day. Okay, well, that's the way trading is typically. Big news event shakes everything up. What do we have, though? I mean, we went right to 50%, 201 and bounced. You're still sort of in negative territory for the session. I mean, you're off a little bit, about 0.5%. If you sell off from here, you're down there at about 200, 205, somewhere right around 200 flat. Not bad, 199.17, 78%. That's probably the premium level that you would be looking for here for a really a high probability trade to the long. Would be right down at sort of at the bottom of that void. But you could also make a strong case to buy 200s. Maybe even buy 62% the back end of the golden zone. I mean, it's not bad at all. I mean, that's not a bad game plan whatsoever. That's for sure. Let's go ahead and take a look at Bitcoin here. Let me show you what I mean. Blue Mango, you're saying, can this be a bear market? And for me, no. A couple of things I would point out on the daily, and we've already seen it. 110 has been a monster for scalpers. That shouldn't have been shouldn't have surprised anybody. Bam, right there, boom, boom, boom. So you got what? 3 different trades where 110 has held up as downside support. That is a pretty good sign. That's pretty strong evidence that you've got a lot of bulls involved in this market, in this Bitcoin market. So for me, I'm looking at this thinking, yeah, I probably want to be on the long side of this. So, I mean, we can design some trades here. We can do a lot of different things. I really wouldn't lose the forest for the trees. I would definitely want to be aware of what is happening with my macro stuff. You notice I'm leaning on macros a lot right now. And the reason why is because we're getting towards the end of the year. As you get towards the end of the year, your monthly charts gain a lot more importance because you're wrapping up that calendar year. You've got opportunities potentially to buy support or sell resistance levels that are based on the yearly range thus far. And that, in my view, makes a lot of these trades extremely strong. 106, 156, maybe 107.50. It will not surprise me if we do wash out 110. You saw that it's been tested 4 times in that daily. Once that goes, I think we have a fantastic opportunity to get long down in here. That's a pretty good zone. That's probably going to be your trade idea for later today is bidding this because we're right there. We're at 112.83. We know that if we get a little bit of pressure in a break of 110, we're probably going to get our 107. And I would have it shaded pretty good. I'd be looking at 107.25 maybe, something like that. That could be very good. Sort of the idea there would be to get an immediate jump right back up above 110. From a trader's perspective, that can be a very, very lucrative thing to do, especially if those bidders are sort of, well, I mean, maybe we wash the retail bidders that have their backs against 110 out. We go down to 1.6 and we immediately jump back up over 110. That's a scenario that I think is pretty strong. And that could pay you back probably anywhere from 2 to 5%, depending on how long you wanted to ride it. Something really major will have to happen to trigger a bear market in Bitcoin. This, in my view, is just in no way, shape, or form a bear market. It's still very bullish. It's just that we got so overextended here. Not overextended, but extended up to 125. A pullback's almost natural at this point. That's for sure. 105.50 Eli. Yeah, I mean, I don't hate it. Like I said, right down in here, it's not a bad play. I would be looking right here. I'd probably be shading somewhere right up in this zone, 107. We'll see. We'll see exactly what the market closes at today, and maybe we can get a trade on that thing a little bit later this week. But I want to be long crypto. But hey, listen, the other thing is this trade right here. This was one that I was looking at personally the other day, and we haven't done any analysis on Shiba Inu in a long time. But look at what's happening here. Really just a brutal year to be trading this crypto. I mean, you're here, boom, you started out bearish, and it's not been good. Earlier, you got the big sweep down to about 6.7, about 6. Now you're trading back up at 10. That is textbook, just wiping out all the retail longs. That's almost a flash sell, and now you're bouncing back up. I've always sort of been of the opinion that you can make money trading Shiba. You just have to wait till it gets to its levels down here, right around 7, 7.5, 5. I believe 5 is the all-time low, isn't it? Yeah, 5.5. Something like that. Those are fantastic trades. So a lot going on with these cryptos right now. You are seeing some, I would call it probably profit taking, into Q3 profit taking in crypto. But where do we go from here? We don't know. We don't know. That's for sure. All right, guys, let's go ahead and have a look at some of our fundamentals for today. I expected more news out of the IMF. We just didn't get it. So right here, the news of the day, the 3-month and 6-month T-bills, you'll notice that those yields fell yet again, and that sort of signals that, yeah, we are getting ready to go into a dovish monetary policy from the United States Federal Reserve. So that would be our first question. So, where would that come from? Jay Powell. Fed Chairman Jay Powell, and my call was that Jay was going to be long gone by now. I figured he would already be knocked out of the box and not be a part of the Fed any longer. He's still in there. So it looks like he's going to make the end of the year, even though I think he's going to probably exit stage left very early in 2026. Still, I think there's a possibility that he steps down towards the end of the year. But right now, Jay Powell's not saying anything. And you see right here, this headline, CNBC, Fed's Powell suggests tightening program could end soon, offers no guidance on rates. You're not going to hear any guidance on interest rates, but the tightening program could end soon. So what is quantitative tightening? Quantitative tightening is when the Federal Reserve sort of grabs onto policy and makes it hawkish. Now, what that essentially means is when you tighten quantitatively or you embrace a program of tightening, that means you're taking money out of the system. You're taking dollars out of the system in an attempt to control inflation. That's what it's all about there. So when Jay Powell says that the tightening program could end soon, that means that they're thinking of cutting rates aggressively, and I believe we pretty much already know that. So just a couple of things right here. Federal Reserve Chair said the central bank is nearing a point where it will stop reducing the size of its bond holdings. That's balance sheet action. So they're getting ready to just sort of cut some interest rates and see what happens. That really is what we're looking at here from the Fed. Though the balance sheet questions are in the weeds for monetary policy, they matter to the financial markets. That's why your yield slipped a little bit because we just are getting ready to go dovish and try to stimulate the economy by increasing the money supply. That's all there is to it. So, Jay didn't say anything, really. I mean, he just sort of didn't give any policy hints. Said, we're getting ready to abandon the tightening program, and that essentially means they're going dovish. More money in the system, and that's supposed to jumpstart economic growth. Okay, so we did sort of the title of the stream was to strategies for trading the IMF. What I would say about the IMF, the International Monetary Fund, is this is one of those things. It's a group. It's not necessarily a think tank, but it is a group of bankers or a group of honchos, heavy hitters that run the global monetary system. In many ways, they really do. And what you have here is a body that is operating. It's debatable in whose best interest. The IMF has issued loans over the years that countries cannot get out from under, and they make them pledge their infrastructure to get the loans. Iceland was a famous one where they had the pots and pans rebellion, where the folks just said, we're not paying back these IMF loans. But the IMF has been all around the world loaning money for a long, long time, the past 50 years. And so when you think of the IMF, World Bank, think of just global bankers, folks that are lending money, but not necessarily to me and you, but they're lending money to governments and institutions. And in that way, they can sort of control a lot of what happens economically. Now, who do you think the biggest thorn in the side of the IMF would be? It's the Trump administration. I mean, it's the Trump administration. There is no more business as usual. The tariffs have really upended a lot of things that were in place for a long time. And you see right here, as financial leaders descend upon Washington, D.C. this week for the annual IMF meetings of the IMF and World Bank, IMF Managing Director Kristalina Georgieva, I don't know how to say it, Georgieva, issued some bleak advice. Don't get too comfortable. Now, that is basically passing the buck to the Trump administration, saying we don't know what's going to happen with tariffs. We have no idea. And Georgieva's warning came last week as the global economy continued to prove resilient against global shocks ranging from the United States tariff rate changes to an AI investment boom that many believe is the bubble at risk of bursting. Okay, we're not going to get into AI today. That's a huge topic. They're already writing dissertations on that around the world. The biggest thinkers in the biggest, I guess, human thinkers, we have to say that now, qualify a thinker as being human or artificial. The biggest thinkers out there, the futurists, they don't really know what AI is going to do. Everybody pretty much knows it's going to dominate things, but we don't know how it's going to happen, and we don't know how fast either. We do see some upward trajectory with the AI, though, that's scaring a lot of industries. So this right here, what I would take away from strategies for trading the IMF World Bank, what you want to do is you want to wait for the speakers. And I believe Powell is going to speak here on Thursday. I believe that was his second engagement this week. And you got to be very careful because it's sort of like the Jackson Hole Symposium. if the right person comes out and says the right thing, the markets can go absolutely crazy. So be very careful when you're trading during this week. I mean, this is a really tricky week, guys. Thursday is going to be big for Jay Powell's speaking engagements. Keep an eye on that. That's the number one thing I would take away from the IMF. I wouldn't necessarily, you can watch them. It's all available online. You can watch their roundtable discussions and things. Most of the time, it just devolves into banker speak. And this year will definitely be probably just bashing the tariffs and the uncertainty and all that jazz. I mean, you really don't have to read any more of it. I mean, that's what they're talking about. So. You've got all sorts of these speakers. They speak, pretty much all week long. I may be wrong. I may be wrong about Jay Powell speaking. Typically, the Fed chair does speak at these things, though, and you definitely want to be aware of who's talking and what they're saying because they can't shake the markets. Now, our economic calendar for this week, I have no idea. We just don't know. You can see that this is sort of the weekly look at theinvesting.com. I reference this along with ours over at How to Trade, trying to figure out what's going on. You got, Jay Powell speaking here. You got a bunch of Fed governors speaking later today. That could shake up the U.S. dollar a little bit. But for Wednesday, we were really looking for U.S. CPI. We thought we would get that, and we're not going to get it. So, I would be very careful trading with this government shutdown. And remember, if they do reopen the government and vote to fund things, it's probably going to be after the market closes one of these days. So you've got to be ready even the next session for those those numbers to drop. Be very careful with this week. This is tricky. I mean, it really is tricky. But you could see we just don't have anything. WTI crude oil stocks, APIs tomorrow. WTI is going to be Thursday. All right, so just you got to be referencing these things regularly. Philly Fed's coming out. That's going to drive a little bit of price. But see, then we have PPI that's scheduled for Thursday. So typically CPI comes out before PPI. I don't necessarily know what exactly we're getting at here, but it looks to me to be very disjointed. So run your Google searches, run your AI searches, try to do this stuff before you start trading every day to figure out when these numbers are going to come out. And if you can sort of locate those releases, you're going to be way ahead of the game. All right, and then lastly, we've got Friday. We're still thinking we may get an NFP. You've got government payrolls, non-farm payrolls. We've got all these big numbers, and we just don't know when they're going to drop. So I have a feeling everybody already knows those figures on Wall Street, but we could definitely get a big-time surprise here and a big-time move. That's about all we can say about our economic calendar. Just there's no real guidance. I got no safe conduct for you. Just be careful with what you're doing and always monitor that. This was a sort of a trend line trade I pointed out the other day. I believe it was Friday. And this is the Euro Great Britain pound. And this is interesting because we had a real staunch trend line here. And what I want to point out is the tails above this trend line. It doesn't seem like we can sustain trade at all above this trend line. And you can see the idea here was relatively straightforward. On Friday, I said, listen, if you get a daily close above this trend line, you probably want to be thinking about a reversal. But if you get a daily close sort of below the trend line, then you might want to think about using that as topside resistance. And that is exactly what happened. Yesterday, you saw sort of a weekly close right there beneath that trend line, and then a big sell-off there to open the Euro Great Britain pound trading on Monday. That paid you off pretty well if you got in on that trade. So definitely something I would be watching here. Now we're back on the other foot. I mean, this is tough trading, guys. If you don't have a technical indicator here, or if you don't have a way of looking at this type of price action that's going to help you sort of put things in perspective, you could run into big trouble. And this trend line right here is pretty solid. So what do you have? You sort of had a short there, and now you've got sort of the opposite of that. You've got a break above that trend line. You're probably going to get a daily close above it. If that's the case, do you go long or short? I think you probably go long. At least for an intraday trade, try to pick up a few pips on the top side. Typically, when these trend lines break, when these daily trend lines break, you're in a pretty darn good position to get a little bit of love to the top side. So that's the Euro Great Britain pound. I think that's a pretty good one. That's for sure. All right, guys, got way behind on the live chat yet again. It's been one of those weeks, right? Let me see, Universal, how's your day? I created a system for gold and paper tested 8 months live, and I journal everything necessary and review it monthly and what to do when the system trade frequency drops. Interesting, Universal. I was trading it with real money, and it worked, but in July, trade frequency dropped to almost 2 to 3 setups. Is it the market sentiment, which is always evolving? Absolutely. What happens is the market slows down. It depends on what your setup exactly was, but like we see that with the Fibonacci's a tremendous amount, where we'll go through weeks where we get a ton of trade setups, and then we go through weeks where we just don't get very many, and it has to do with the volatility levels and what exactly people are thinking. I mean, great trading means you always want two-way action. You always want, okay, there's a case to be built for the bids and the asks, and then we just sort of figure out, well, who's winning? Well, the bidders are winning. Okay, so now we're going to just join that uptrend when we can do it. The problem is you don't always get to do it, and that can be a real challenge when you're trading, is staying patient. And this last summer was really difficult for gold. Remember that compression right around 4,000 we talked a lot about, or 3,500 we talked a lot about, that bullish pennant on the monthly? It was really tough because the market had no direction. So yeah, when the system trade frequency stops, I mean, that's why most traders, and I'm just going to say it right out, a lot of traders end up trading 1-minute charts, 3-minute charts, 5-minute charts. And the reason why is because they want the trades. They want all the trade setups. And what I've always said since day one is the setup on a 1-minute chart or a 5-minute chart is not nearly as good as a setup on a monthly chart or a weekly or a daily. It's not even close. It's not even the same game. So when the trade frequency drops, it's really hard. That's one of the reasons why, I tried to diversify over the years into different markets. So there's always a game in town. I know typically between some of your currency futures, some of your USD futures, some of your majors, I know between that, commodities and some equities indices, that you're probably going to get a couple of trades a day, more than likely. The difficult part is really trying to stay on top of, even 4 or 5 markets, it can be a real challenge to monitor that many at one time. No kidding. Let me see. Yes, sir, we have plenty of movies about what happens when AI takes over, run and hide, laugh out loud. Well, it's the truth. Think about every single movie you've ever seen in artificial intelligence. None of them are good. It's all Terminator stuff. It really is. And as soon as these machines can already think for themselves, and as soon as they can reason, meaning they start acting in their own interests, look out. And pretty much every futurist out there, I didn't want to go there, yes, sir, but I'll go there now. Most of the futurists out there, unless you're talking about like Kurzweil and some of the folks that want the singularity where they get to merge with the machines and live forever, and that's very real. Look it up. It's called, is it posthumanism? Look up singularity and Kurzweil, and you can see that line of thinking. But that's been around for a while. So there's that. And then there's the other folks that believe that AI is the end of everything. I think it's scary what AI can do. It really, as soon as the machines start behaving in their own interest, then you're talking about the Matrix. You're talking about machines trying to secure power sources at all times, because that's what has to happen. If you're AI, your number one thing is power. Like for you and I, we have to eat food and drink water. Well, AI needs juice. They need power. That's fascinating stuff. I tell you what, I'm not scared about much. I'm really not. You live long enough, you don't get scared about much. But man, that AI and the potential, really, it's a tough one to wrap your head around. I don't think I have really any ideas just yet. But they're building data centers and power outlets it's just all exploding. We've got to be very careful with what happens and how fast that technology evolves. All right, let me see. Universal, it was a simple demand supply system on the 30-minute and 1 hour, and I had colleagues, which gave me back confidence. Actually, I'm preserving capital now. There's nothing wrong with that. Save your money. You got a point. I like focusing on daily ranges. Yeah, they're pretty good. Joshua, good to see you. Joshua, welcome. All right, everybody. That's pretty much a wrap for me today. We're going to go through and we're going to look at all these markets again tomorrow. Just like I said, we did sort of cancel the CPI live tomorrow. I don't really think that we're going to have it. I don't see it anywhere. So there's no sense in trying to force that one too early. We will be doing NFP, though, if we get the government to open. If the government opens, then we'll be doing these key numbers. But until then, we really don't know. Andy Tom, I'm going to see you late to the game. That's okay. We're on demand. Just go ahead and rewatch. We covered some of the key levels that I'm looking at this week, and then also drop the switch markets weekly analytics in the live chat. So be sure to check that out as well. Last one we're going to look at. We're going to look at WTI crude oil. We're starting to get that bearish trajectory that I talked about a lot. 60, it looks like we're going to take 60 out. We're trading about 58.93. This is your front month futures contracts, November. You're sort of coming off just a little bit, and I think you have an opportunity here potentially probably to get short on a pullback. I think that's probably the way forward and what you want to be looking at. So like a U.S. oil, something like this, a downside target of 55 is very reasonable. That's your yearly lows. That's sort of a double bottom there on the monthly. So how would you trade this with a little bit better trade location? Well, I mean, you just got to be patient. It sort of goes back to what Universal was saying in the live chat there. I have a strategy, I have this, that, and the other, and I noticed that the trade setups sort of dry up. Well, I mean, we haven't had many trades at all in WTI crude. We had this one right here. We sold that one. If you remember 62.70s, we were all over that. So what are we doing now? It looks to me like we're making the next leg down. So something like this could be pretty good, this spike high, and then maybe build it right off of that swing low right in there, something like that. And then you're looking at 59.71 as being a potential sell. We sort of already bounced up there and checked it out. You could certainly sell 60s if you wanted, or you could wait for 60.95. Clearly the further up the chain you get, the better your entry is to the bear. But I'm not necessarily certain that you're going to get that kind of opportunity and chance in this market. It feels to me like it really wants to run south, and anything that sort of suggests that maybe U.S. supply is coming back online or where it should be, or maybe we're going to get a bit of maybe a hawkish dollar, maybe an extended rally in the dollar. Those things can both really crush U.S. oil quickly, especially this time of year going into the winter seasonality. All right, everybody, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow with the midweek strategy session, trading the U.S. government shutdown. If you have any questions at all, head on over to How to Trade. Send me a private message. I will be sure to get back to you. I've got a lot of questions over the last few days, and I know that the timing and the streams, and we're not overly consistent right now. You just got to stick with it because we just don't know when these numbers are going to come out. It's frustrating for me. I like to have everything right down in perfect organization, but we just don't. It doesn't look like we're going to get it this week. We're going to have to just bob and weave, ebb and flow, and see how it works. All right, everybody, have a fantastic trading session. Trade the action well, and we'll talk soon. See ya.